Hey, welcome to Financial Revelations. I am David Safransky. I'm your host every week on Financial Revelations. Next week, we're not going to have another host. I'll still be here. You can get to us at on Twitter at FI Revelations, and you can email us questions, concerns, comments, anything that you want. If you'd like to address a certain topic, I'd love to do that for you. Joshua at epsf.com, and all this stuff is going to be put over my head here, so you can email Joshua, and those emails all get to me eventually. So today the Fed chairman spoke. They're doing the Jackson Hole, Wyoming symposium. They bring in a lot of people. They kind of decide some policy, and the Fed chairman gave a speech this morning, or had some comments. I'm going to talk about that in a second. But yesterday was kind of a sad day for America, because not kind of a sad day, it was a sad day. We lost 12 soldiers. Now I think I saw as many as 600. 200 Afghan citizens were killed in suicide vests. And yeah, I really I want to take a minute and just ask people to pray for our troops in Afghanistan. And not only the troops there, but the troops that had been there and are now back home. A lot of people are having a hard time with the way we're leaving, and it's very emotional for a lot of people. And it's hard. And I want to pray for those guys and those men and women that have been over there and sacrificed so much for us. I want to pray for the Americans that are left in Afghanistan. We still have a lot to get out. We have people that helped us, that are Afghanis, that helped us, that are trying to get out. I want to lift them up in prayer too. And the decisions from our president. These are big decisions, undoubtedly, for anybody. They're not easy to make. There's a lot of lives at stake. You need to be praying for that. The one thing is that this is not really an economic event yet. One of the things that happens when we look weak, when things don't go the way that we wanted them to, we really embolden a lot of our enemies. And if you embolden one enemy, you really embolden all of our enemies. And I think to kind of reclaim that power structure that we want, we're going to have to project some power someplace, somehow, some way, and relatively soon, while this wound is still fresh. And not everything always works out the way you want it to. Ask Jimmy Carter. Helicopters in the desert was really nasty. And this kind of looks bad. This looks bad for us. The way we withdrew, the way we exposed ourselves, all this looks bad. And so I do think that there's going to be a projection of power happening, and that's when it could become an economic event. So we're going to have to wait and see. I do think that one of the ways that this could affect economics is people who are on the fence with the Biden economic plan, with the $3.5 trillion after the infrastructure bill that's going to probably get passed, it could affect the passage of that bill. You could see some people running from what they conceive as a sinking ship. And so some of that is at risk right now, and that could be the economic side of this. Now, if you've listened to me or talked to me at any length, you know I don't want that economic plan. I think the $3.5 trillion is really just the Green New Deal in disguise, and it's dangerous for America. I think it pushes the wrong narrative. I think it spends money incorrectly, and it's a tax trap. We're going to get forced into paying more taxes because of it. There's no way you could pay for this without raising taxes. Now, Joe Biden won't raise taxes. The next president will. Okay, so I want to be praying for our people over there and our troops, and if we send more troops over, which I hope. I don't know if we need them or not. We got 5,500 people over there. That's a lot. And I'm sure some of them are special forces, and I'm probably quite certain that they're outside of the wire right now. So on the upside, we've got markets are continuing to rise. There's a lot of money. There's a lot of pent-up demand. I have friends that went to national parks this summer. They couldn't get into Glacier. That is a good thing. Inflation is above trend. That's not good, but it's moderating. That is good. The problem with this transitory inflation is if it lasts too long, it just becomes inflation. So if we have inflation that's higher than trend, that's transitory for 2.5, 3 years, it's not transitory anymore. It's just inflation. That is not a good thing. And when inflation gets a foothold, it could be problematic. It's hard to bring down. The only way you bring down inflation is to raise rates. You got to slow money down. And when you slow money down, you slow the economy down. Not generally a good thing. Another good thing is this Delta variant that we're dealing with. The numbers seem to be leveling off in a lot of places. They're not at, we're not at zero new cases, but we're way lower than what we were a few weeks ago. And that is a good thing. So I think we're seeing some of this Delta variant kind of work its course. So, but we know that for unvaccinated people, this Delta variant is pretty serious. So if you're not going to get vaccinated, be careful. Okay, I'm not going to tell you to get vaccinated. I'm not going to judge you if you don't. You got to do what you think is right, but be careful if you don't. Another good thing that just happened last night is the Supreme Court struck down the eviction moratorium. Now, nobody wants to see anybody get evicted. Nobody wants to see that. People get evicted all the time, but I don't want to see it. Look, normalcy is coming back very slowly, and we need that to happen. We need normal economics to start to come back. And we do have 9 million jobs that are open across the United States. We have McDonald's is paying people $17 an hour to start in some places because they just can't get people. And I know that on $17 an hour at McDonald's, you are not going to be driving a Mercedes, but you can pay your rent. And I think the thing that really kind of burns people up is when there was a landlord in Florida whose air conditioner broke. He has to fix it. It's a law, so he's going to follow the law. He goes to meet the service guy at the house, and there's a brand new boat in the driveway that the renters have purchased, but they can't pay their rent. So people are making economic decisions at the expense of landlords, and the rent assistance that would have gone to landlords is sitting in the coffers of government right now. They're not really dispersing it, so these people are hurting. Banks are going to come and take that house unless somebody pays the mortgage. And if nobody's paying the rent and the rental assistance isn't going out, banks are going to take that house. We don't want to see that happen either. So people should pay their rent and get a job. There are plenty of jobs. So on to the Fed chairman. Chair Powell spoke this morning before market open. He's in Jackson Hole. They're doing the symposium there. It's way up in the mountains. Now, if you've ever been to Jackson Hole, you're going to know what I'm saying. It is a lovely place. It is an expensive place. So it makes perfect sense that the Fed would be meeting in Jackson Hole at a private residence that I think is a couple hundred acres and like $70 million house. When I see a $70 million house for sale, I think, how much do you got to love that house to spend that much money on a house? So I live in Vermilion, and out in Vermilion, the guy that designed the drop ceiling, probably have one above your head right now. He lived there, and he built the house on the lake. It's about 150 acres on the lake. He put maybe a 50-foot berm all the way around the property so nobody could see into it. You can only see it from the lake. He died in a plane crash a few years back. They just sold that house, 150 acres on the lake, beautiful house, one of a kind, destroyed the plan so nobody could ever build it again, exactly like that. They sold it for $2.5 million. Okay, now I think that's an expensive house, but if that were in California, that would be a $50 million house. So anyway, a little tangent there. The Chair Powell spoke this morning, and really what he did is he set the stage. And what he set the stage for is they're going to taper bond purchases, and for every dollar that the federal government issues in debt. So Congress passes a bill, or they need money to float the government. They sell bonds. The Federal Reserve is buying 52 cents of every dollar. Well, they've never done this before. Pandemic. Well, they did it before the pandemic. They did it after 2008. They were QE, and QE2 and QE3 was part of these bond purchases. Well, they're going to taper those bond purchases. They're not going to be the major buyer of government debt, and they're going to start that taper sometime, probably September, October, November, depending on the economic data. They want leeway, and I get that. But the effect of them doing that should be slightly higher interest rates. A lot of times the long-term bond might come down a little bit and short-term bonds will go up, but I think we're really paying attention to a couple of things. The 10-year bond is very important, and the split between the 10 and the 5 years and the 10 and 2s. And there's a range that it should be at. And I think we're going to get back to that range. And I think the stock market eventually is going to like that. Now, when they actually use the words taper, I think the market will probably adjust immediately downward. But I was just telling somebody the other day that when the market reacts to something that the Fed says, I don't really pay a lot of attention for the first couple of days because it tends to be very reactionary, emotional. The market is, people on the market will tell individual investors, you got to take the emotion out of it. But they are the most emotional people you'll ever meet. And they prove that on a daily basis. But I think in the long run, the market is really going to like the moderating rates. And you're still going to have mortgage rates, not at historic lows, but near historic lows. And I think the other thing that the Fed chairman had really set up is a rate hike in 2022 if the data supports it. And when you have 9 million jobs, when you have employers begging people to come to work, the data is very supportive of rate hikes. So what's happening government-wise is you're seeing a lot of states are doing away with the COVID kicker and unemployment, so people aren't making as much money. You now have to pay your rent until Congress passes a law, and I don't think that law is going to get passed that allows you not to pay your rent, and nor should it get passed. You're going to see these things happening. You see people going back to work, productivity increasing, and I think you're going to see the real estate market probably start to cool a little bit from very hot levels. And I think you're going to see the stock market very accepting. And as people go back to work and the virus kind of runs its course, remember, or maybe you don't remember, but I've mentioned Spanish flu a couple of times. It lasted 26 months. We didn't have a vaccine. We had nothing for the Spanish flu. The upward estimates of the death toll of Spanish flu is 100 million. I don't think we're going to get close to that with COVID, but we're not even in 2 years of COVID. So if it follows a similar pattern, we have a couple more waves of this to go. So we need to be vigilant wherever we can and smart. But normal is coming back. And when that happens, you have all this money in savings, all this excess money that people haven't saved because they haven't gone anywhere, which is we're starting to return. Remember, the national parks, very crowded, got to have a ticket just to drive through them. The stock market is going to go up on that news. So moderating rates, and I know this Fed is not going to raise rates too fast. They're just, if anything, they're going to raise rates too slow, and the market would like that. So I do think that the markets are going up on these things. I think they're fairly positive. Now, there could be a black swan event. There could be another outbreak of COVID that is worse or as bad as the Delta variant. And if that happens, it's a buying opportunity. So any market shock right now, to me and our firm, is a buying opportunity. We're going to get another bite at that apple if that happens, and I want to take it. So at FI Revelations on Twitter, and I want you to sign up. Would you sign up there already? Because I want to do some surveys. They're not scientific or anything like that. I understand that. I just want to know. And they're also anonymous, so you don't have to say who you are. You just vote. And I ask people questions like, are you going on a vacation this year? It seems like the answer for a lot of people is yes. Now, if there's a frequent flyer mile in my account, my wife is scheduling a vacation, so you don't have to ask me that question. I'm definitely going on vacation. But as I've traveled, I've noticed, I was just in Hawaii for business, very crowded, much more crowded than it was when I went in December for business. So I like to say that because I don't want people thinking I just jet off to Hawaii. And you can email us, joshua@epsf.com. If you have questions, I want you to ask them. I will answer them here. We tend to probably email you back and tell you when we're going to answer the question so you can pick it up, make sure that you watch. But I want to hear what you're thinking. I want suggestions for the podcast. Somebody did say the other day, we love when you film at the house because we love your decorating. I just want you to know, on the lake level, which is right next to the lakeside veranda, I picked that blue. Now, my wife vetoed the first blue. She said, no, that's blue. And what we really want is blue. And so I had to go with blue. But I like it. It's lovely. It's enchanting. So Love talking to you guys. We'll be back next week with some more updates on the market and some new ideas. And if news breaks, we might come to you early. Who knows? But most likely next Thursday, we'll release another Financial Revelations. I am David Safransky, your host. Have a great week.